if you use this tool, as I'm going to be explaining it, you can never and you will never blow any account again. Guys, enough is enough of brokers eating your money. There's a story of this man, a man he was looking for diamond. At the time, diamond was something in the US that everybody was looking out for, and people identified it. And then this man he really wanted to have diamond. They said just one stone of diamond can settle you for the rest of your life. And this man had a farm. He was working on the farm. At a point in time when the story and the gist of diamond was so much, he decided to sell off his farm to go look for diamonds in South Africa. He sold his farm, and when he sold the farm, he sold it to another farmer. Now, this other farmer started tilling the ground. Meanwhile, this man went to South Africa. He was looking for this diamond. He paid all the money that he gathered for this thing. He spent looking for diamond. But at the end, he lost everything that he had, and he never got that diamond. Meanwhile, the man that bought his farm, that man was just walking one day. He just saw a stone, a bright stone. He doesn't know what diamond is. He just said, oh, this stone is glittering. He just washed. Diamond is not as sharp as you see it when in its raw form. He took this diamond, washed it, and put it on his shelf in the house. Then one day, a friend came calling. And when the friend came, the friend told him, he said, come, man, where did you get this stone? He said, no, I just saw it on my farm. He said, on the farm? And he looked at it. He said, this is diamond. He said, you can't make it. How can you tell me that this is diamond? And then he took this diamond stone. They went to those people that check these stones. And the guy said, this diamond is worth so million. Wow. The man kept quiet. And he went back. He told his friend, he said, do you know what? I see a lot of these stones on my farm. And he went back and he began to see. He had acres of land, and those acres of land was filled with diamond. And that's the book we call Acres of Diamond. I don't know how many of you have read it. A lot of people walk out of opportunities because they decided or they refuse to walk deeper in the field in which they've chosen. Many of us want this wealth, but we want it to just come as refined diamonds. We want it to come as refined diamonds, but it does not come like that. Ladies and gentlemen, on that farm, in that skill, in that profession that you are, there is an acre of diamonds for you. But will you be ready? Will you be able to mine it? Will you be able to work for it? Will you be able to sweat for it? Now, this is the same thing that I'm going to be showing to us, a kind of tool that many of us that are in the industry, especially in the Forex industry, a tool that will interest you so much. For many of us that are in this industry, or people that want to be in the industry, one of the challenges that you always have is, oh, when I join this thing, when I take a trade, I know Forex is good, but it has not been good for me. I know people are making money in Forex, but I have never gotten ahead with it. So you truly know that there's an opportunity in the Forex market. But the obvious truth is that it seems it's not working for you. As a matter of fact, some people will even say, the moment I join, that is when the thing will just scatter. The moment is as if somebody is waiting for me, that once I click buy like this, that is when the market will start going against me. Nobody is watching you with your small money that you're having there. There are people that are having millions of money. So one of the things that you have to understand is that there is a special way for you. There are people that are making it in this, and you got to find out how they are making it. Now, this brings us to this tool. Ladies and gentlemen, it is possible that once you understand this dynamic tool, you will never ever lose money again in this industry. Take me again. When you understand this tool, when you understand the dynamics of this tool, you will never lose money in this industry. And before we go, if you're going to stay along with me to the end, I'm going to be showing you, for those of you that don't know yet, I'm going to be showing you how you can get extra funds to trade this market. You see, starting from where I started from, as a finance person, I'm always thinking, oh, one of the important things in trading is not about making profit. It is what I call capital protection. How do you protect your capital? That is the first thing. But as much as we even try, oh, don't risk more than 1% of your account, don't do this, always use stop loss and all this and that and that. But at the end, we still blow up the accounts. And I was kind of getting to a state that I felt, come, this is not just working. Instead of wasting my time, can I just go look for something else to do? But ladies and gentlemen, in the course of this, I saw this particular tool. And when I got this tool, I understood it. I knew that, yes, you can really stay protected in this market, provided you can be disciplined. And this is very fantastic. Now, for those of you that are joining us for the first time, my name is Olushola Popola, a chartered accountant, investment advisor, and a life coach. And today, I'll be showing you what a tool we call the HedgingPro and how you can utilize it. Please keep an open mind. One of the things that I found out is that for people that have been traders before, people that have been trading, they find it difficult to immerse themselves in this tool because what you know before, those things that you know, they drive your thoughts, they drive your imagination, so that even when you are supposed to take and keep to the ethics, you find yourself jumping from one place to another. As you use one indicator here, you use another indicator, you use price action, you use this. But if you can be disciplined, if you can be patient, you will benefit from this tool. So let's look at this tool in details, and I'm going to be breaking it down and show you how it works. At the end of it, I want you to either agree or disagree that truly, if you use this tool, as I'm going to be explaining it, you can never and you will never blow any account again. Guys, enough is enough of brokers eating your money. Brokers have taken our money a lot of time. Because you know, when you lose that money, it goes into the account of the brokers. Because most of them keep what they call a book and pre-book. They don't even connect your money to the liquidity provider because they know by standard 95% of people that trade must lose their money. 95% of people, traders must, as a matter of compulsion, they must lose their money. So because they know this, what they do is they open what they call an A book and B book. If you are a trader that you are not making loss anyhow, they will put you in the A book. But if you are one that is always, they once you start trading, they know your pattern. They will put you in the B book, and they will just trade against you and make your money and take away your money from you. But if you understand this tool and see how it works, guys, it will help you. So whether you've always been in this meeting before or you are new, please pay attention. Let me take you through this particular tool. So I'm going to be sharing my screen. Let me go on this. Just a moment. Okay. This is a price chart. This is Euro AUD. Euro AUD. Every time the market trades, the market always trades from the zone we call the support to a resistance zone. That is how market goes. It goes from support to resistance, from resistance to support, and that is how it continues to move. Now, look at this. If I decide, let me say something, just please follow this. Let me say, by any reason, I'm not even talking about an EA now. I'm not talking about, I just want you to look at this particular chart. Let me say, for any reason, I'm on this chart, and on this particular day, look at it, guys. On this particular day, this day here, I hope you can see this. Okay, on this day, feedback from somewhere. Okay. All right. Look at this. On this particular day, here, I'm going to bring this, let me bring this line here. You can see this line here. Look at this line here. You know, for whatsoever reason, I saw this candle here going up. I saw this going up, and then I now suddenly see a candle coming down, this red one. You know, for those of you that are familiar with the charts, you see the green one means it's going up, and the red one is that market is going down or price is going down. If I decide to sell the market, I clicked a sell order here for whatsoever reason. I clicked a sell order here, expecting that the market is going to sell. Guys, please pay attention here. I clicked a sell here, that the market is going to, the market is going to go down. Price is going to go down. And price truly came down. But maybe I was doing something somewhere, and then suddenly, instead of continuing downwards, the price started going upwards. Now, this is where I entered the market. Look at it here. I put the green line here. This is where I entered for a sell. I made a sell order here. All right. Now, this sell order was at 0. Text. Okay. Okay. So this is sell, and I sold at maybe 0.02. That was a sell order. So guys, look at it here. I made a sell order here. This line here, sell here, expecting that the market is going down, but the price of the market started going up. So when it started going up, I have put up my mind that I'm not using stop loss. I'm not going to use stop loss, because if market goes against me and it hits me at the stop loss, my money is gone. My money is gone once it hits stop loss. But instead of using stop loss, I decided to use what we call hedging. Hedging, to hedge. All right. So I decided that if the price of the market goes 50 pips against my own direction, that is, I'm saying from here, maybe 50 pips is about this point here. My 50 pips is about here. All right. So if market goes against me by 50 pips, I would have set an order to buy. Guys, look at it. Let me change this one. Let me change this color. I'm going to change this color to red to depict the sell. All right, guys, just pay attention. If you understand this, you will never lose money to any broker again. I am telling you, provided you are diligent at it. All right. So the red one, the red line here stands for the sell. All right. The sell. And I said, if this price, instead of selling, if it goes against me by 50 pips, I will initiate a buy. So instead of me putting a buy stop, instead of me putting a stop loss order, I'm going to put here a buy stop. All right. I put a buy stop on this line here. So let's name this place. Let's give this place a buy stop. Guys, here I'm not even talking about the EA yet. I'm talking about somebody who is trading manually. So I'm going to say buy stop at what? 0.02. 0.02. Okay, 0.02. Now, guys, look at this. Please pay attention. Now, I made the first one sell, and I said if it goes against me, if it gets to up to 50 pips, the distance from this one to this, from this place to this place, from the red line to the blue line, once it is 50 pips, please hedge my trade. Hedge my trade. So when I say hedge, what it simply means is this: I was selling at 0.02. Was I buy at 0.02? It means I'm not going to be making profits again, or neither will I be making any loss. Now, guys, look at this. When this 0.02, when it started going up, when it was coming down, I was making profit. But market reversed and went up against me. When it was going, at this point, I was losing. Maybe as at this point, I have lost about $10 or thereabout, which is my risk limit. I don't want to lose more than $10 there, guys. So I put my buy stop there. So I have calculated my 50 pips. 50 pips, 0.02, or 50 pips, that's about $10. Okay, that gives me this. So therefore, when the market came up to this level, it bought. Now, when it buys, I now have equal lot size buy and equal lot size sell. Guys, whenever you have the same lot size as your buy and your sell, that means you have hedged. When your sell and your buy are of the same lot sizes, if this one is 0.0, if the sell is 0.04 and your buy is 0.04, that trade is hedged already. That trade is hedged. So here now, guys, I'm now going to show you the power of this tool. Now, when it's hedged, everybody will just look, okay, at what point are you going to get out? How will you get out of this hedge once it has hedged? Now, simple. Be patient and observe this. You see, there is a green line here. This is what we call the support line. And you see there's a red line here, which we call the resistance zone. So, let me reduce it here so you can see. You can see this. It says verified support. Why do we call it a verified support? That means it's an area that price has reacted to severally, maybe 2 or 3 times. Price came into this zone, broke it. There was a kind of resistance support here, and this place was initially serving as a resistance zone. Price hits it, it came down, it hit it again, came down, and it went down. Then forcefully, price busted the area. Now, after breaking the zone, it came down again, it was supported here. Price came up, came down again, it was supported. That means there must be something in this area that is not making price to easily pass. Take for instance, when price is going up here, can you see the way the price is just going up? Nothing is stopping it. Unlike this place, there's always something to stop price at this zone. So this is considered a resistance or a support zone. Now, when you go up, likewise, you can see the red. The red, this one is saying that this is a resistance zone. A resistance zone. That means price went up and was rejected. It was resisted. It went up again, trying to go up to break it. It was resisted. It came down again. It tried to go up. It was resisted and it was pushed down. So now, as a trader, please, as an hedging trader, I want to look at, remember I had my buy stop. I have a buy 0.02 and I have a sell 0.02. All right. Now, you will agree with me that as the price continues to go up like this, when it gets to this one that is a sell, it will continue to be in a loss. I hope you understand. This one, the sell, will be a loss. It will be running at a loss. And this one that is a buy will be in profit. It will be in profit. But I put to you that if the difference when this one happened, if the difference was $10, it will not shift from that $10 because they are equal. They are equal. The buy and the sell are equal. So if it continues to go, let me tell you, till thy kingdom come, till leave it for the next 10 years, the drawdown on this account cannot be more than the $10 that I have initially stipulated. It can never get more than $10. The only challenge here will be what we call swap. You know, what do we call swap? Swap is when the broker charges you for holding a trade overnight. When you keep a trade overnight, they call it a swap. All right, so they will be charging you that. Now there are positive swaps, there are negative swaps also. So, but in this situation, please, off that telly now, off that radio, just pay attention to this chart. This is a negative. Let's say as at the time of the market going from here to, from this zone, from this red line to this place, this one was on -10. The sell was on -10. Then from here, the buy came in. So as the buy came in, if they both go up, maybe by another 50 pips, or let's say by 100 pips, if they go up by 100 pips, the buy here will now be positive $20. The buy will be in profit of $20. Now, remember, this one had gone like 50 pips, which was $10 negative. Now, if it now goes by that 100 pips from here, from this line to this top, 100 pips, that means this one has traveled a distance of 150 pips. And that is going to be how much? It's going to be at a loss of about $30. So minus, this one will be minus $30. Let's look at it. Let me label it so that when you just got to rewatch this so that you get this explanation very well, guys. This is a super duper strategy that will help you never to lose your account again. Let's look at this. Okay, so I'm going to take the first one, the sell at 0.02 going I'm just trying to put it in such a way you get it, going 150 pips will give a loss of how much? That is 0.02150 pips. Literally, ordinarily, let's just call it $30. All right, it's a loss of, let me put it minus, so that you can easily get it, minus $30. Okay, let's have it that way. Okay, so when they got to this point, the two of them, remember, this sell and this buy, this one has moved from here to here is 150. That's from this place to this place. From this line here to this place is 50 pips. I'm just using this as an illustration, please, so you should get it. So let's put it there for the sake of revision when you are revising. So here, this, we call this one 50 pips. We call this 50 pips. 50 pips, all right? This is 50 pips here, guys. That's from this place to this place. Then we now have from this place that the market got to this place, to this green line here. Let's call that one 100 pips. All right, let's call that 100 pips. Please, I'm just explaining this thing manually. You don't need to do this manually. We have a system that is taking care of all this stuff. All right, So from here to here, from the green to the red is 50 pips. From the green line to the zone here where there's a reversal is 100 pips. That means the total from this place to this place will be 150 pips. Guys, please, if you get this explanation, I'm just playing something. If you are getting it, just give me a thumbs up there, guys. Let me be sure you are getting this. I'm trying to make it as simple for everyone to understand. Please, if you're getting it, put a thumbs up there. Let me be sure I'm not confusing you in any form. Awesome. Thank you very much. Okay, we've established the distance now. Okay, now the buy order, this is the buy. Now this buy, by the time it gets up there, it has gone 100 pips. 100 pips. So if it is 100 pips, guys, what will happen here? Let's copy and see. Can it paste? Can it paste it? Okay. All right. Let's take the buy. The buy. Please just watch. We say buy at 0.02 lots. 0.02 lots going 100 pips. Going 100, you understand why we have 100 pips? Will give a profit of $20. All right. Okay. That's it. Now here's it. So the sell from this level to this level is going to be a loss because it's going against it. The buy is a profit. So if you look at what's the difference between minus 30 and 20, that is $10. That's $10, the same $10 that it was here. Let it go to Kilimanjaro. By the time they still get to the top of Kilimanjaro, it will still be this $10 loss. All right. Now, how do we get out of this now? We have this zone, which is the verified resistance. Most of the time when price gets to the resistance zone, it will come down. At times, it might break the resistance zone and continue going up, depending on what the market is saying. But that's not our business. We want to trade what we are seeing right now. Don't trade your imagination, trade what you see. Now, what will happen? How do I get out of this situation, guys? What I'm going to do is this, just simple, guys. This $20, I'm going to close because this is a profit. And because this is in this verified zone, I don't want this buy. The buy. I don't want it to start coming down again and drag me into this mess. No, I'm not going to go to the gutters with it. I want to close it because it's on the resistance zone. So when I close, I will close this $20 in profit. Please note, when we are talking about trimming, this is what we mean by trimming. I want to trim the lot size, but I'm not doing the trimming until I get to a zone. Please, I want to advise you, don't trim your trade at the middle of the way. Always make sure you do trimming at the zone, preferably a 4-hour zone. Preferably a 4 hours zone area. Okay? But for the purpose of this, I just got this zone here. Let's just stick with this chart here, guys. Now, I'm going to take this $20 and we close this $20 profit. If I close this $20 profit, what is remaining? I am having 0.02, which is going to be minus $30 loss. But remember, I have closed the profit. Now, what will I do next? I will go to my account and I will reduce this 0.02. Because it's $20, What if I have 0.02 here? I want to change this to 0.01. Do you agree with me that if I reduce this to 0.01, that means I can close $15 in negative? I will close $15 if I decide to close half of this trade. That means I will close 0.01, which is $15. Now, am I going to be in profit or not? Net profit. Now, note, this was $20. This is $15. 20 minus 15, that's half of this. That means I have a net position of $5. Anytime you are trading, make sure you always have a buffer. Make sure you always have a buffer. But in a situation where there is no room for a buffer, let's say for whatsoever reason, I'm going to take this example now, pay attention. Let's say instead of $20, maybe this one, by the time it got to the resistance zone, this one was just only $5. So I have 0.02 $5 and I have 0.02 $30, which is negative. I don't need to do any trimming here. I don't need to do any trimming here. What I will just do is I will close the buy order. Why am I closing the buy? Can somebody put it in the comments? Why am I closing the buy? I have mentioned it here. Why did I say at this zone here I will close the buy? Whether I am trimming or not, can somebody put it in the comment chat, guys? Or can somebody unmute? Can you unmute your mic if you are sure of it? You are very sure. Unmute and just tell us why did I say I will close the buy at this zone here, at this verified resistance zone? Quickly, somebody please.
Hello, sir.
All right, go ahead, sir.
You said because it's your profit. Because it's a profit.
Because it's my profit. Well, we've been having profit from when we took a buy. It has been in profit. It has been in profit. So it's not because it's a profit. It's not.
And you don't want to lose it too. You don't want to lose the profit too.
Yes, I don't want to lose the profit. But there's a particular reason.
A resistance zone.
No.
Again, please.
It's because that place is a resistance zone.
Thank you, Mr. Patrick. Because it's not because it is in profit, Mr. Godwin. It's not because it is in profit. We've been in profit the moment we entered this bar and it was going up. We were in profit. Do you understand? We were already in profit the moment we entered the buy and it was going up. The reason why we are closing the buy here is that we want to close we are in a resistance zone, and when you get to a resistance zone, remember the basic principle of trade: sell at resistance, buy at support. When you buy at support, you sell at resistance. So we bought at a lower price, the price has gone up now, so we want to sell it off. We sell it off, we close it. And we're not just closing anywhere, we want to be sure that it is at a resistance area, because there is, when it gets to a resistance level at a higher time frame, please note that at a higher time frame, there is about 80% probability, 80% probability that the market will start coming down. It will start coming down. Now, if I close this sell, so whether I close this buy at 20, whether I trim this one or not, that's the sell, whether I trim it or not, it is going to come down here. It will be coming down. This minus 30 will now be minus 25. It will become minus 25, become minus 20, then it will get to this level, it become minus 10. As at that time, something else that I will have done, because I'm not in control of this market. What if for any reason price bumped this place and continued going up? Remember, I have closed my buy. So what am I going to do? Guys, please pay attention here now. Okay, I want to squeeze it so that you can see. Now, I just made this, it's still the same chart. I just squeezed it up, all right? So remember, we closed our buy. We closed our buy in profit at this area, all right? Now, you must not be careless. You must not be careless. Tell yourself, I will not be careless to leave my trade open. Don't be careless to leave, because the moment we close this buy, this trade is open. We are only having a sell. We are only having sell. This sell, we didn't close the sell. The bot got to this place. We closed the buy. We did not close the sell. What if the market continues to go up? If it continues to go up, that means we'll be making a loss. We'll be running at a loss. The buy is no longer there to cushion the effect anymore. So what do I do at this point, guys? I'm going to set what we call a buy stop. I will come to this place at the top of this band. At the top of this band, I will set a buy stop here. And what is the value of the buy stop? I'm going to set a buy stop here. Set a buy stop. It's going to be a buy stop at 0.02. Now, look at this, guys. It's going to be a buy stop. I will set the buy stop at 0. Hope you can see where I put it there. I'm putting it at the top left corner, right? The buy stop. Now, the reason why I am using 0.02 here now, guys, is because I assume that I couldn't trade. I just close this profit. This one remains, the sell remains at 0.02. So if the sell is 0.02, the buy, I'm going to do buy stop of 0.02. But if I've been able to reduce this to 0.01, then my buy stop will be 0.01. Now, guys, look at this. That's where patience is very key. Patience. Look at this. Happened on the 13th. You know, this trade was taken like on the 15th of August. This happened on the 15th of August. It went against me, hedged, and I waited for it to get to this zone. I closed one side. Now, ladies and gentlemen, can you see something? The market came down again. It came down again to this point where I entered the sell. And it came down to this level. And this gave me profit. I closed this market totally a profit. Now, how many days did it take me? This took probably about 10 days or thereabout. But then it did not stop me, because $10 or $25 was maybe just 2.5% of my liquidity, of my equity. So I'm not losing anything. I was taking other trades. So this particular one was secured. Ladies and gentlemen, if you understand this strategy, as I've explained it manually, this is exactly what our Hedging Pro does. This is exactly what our Hedging Pro does. And how does it do it? It sets everything that I've just explained here. Let me quickly show you here. Let me show you here. I don't know whether I have it here. Now look at it. One of the indicators here. Look at this indicator. Please watch it here. You know, all this one, you have your normal, your details and everything. And all you need to do with this EA, this is an EA. It's not just an ordinary tool. You see, this EA is different from this indicator that we used to do this zoning. This zoning was done. We did this price zone management with the indicator we call the price hunter. Price hunter, that's the name of the indicator. Very, very good indicator. And always work with the 4 hours or the daily for the resistance, because sometimes 1 hour resistance or 1 hour support can be busted. Now, this EA, the EA is called Hedging Pro. But after the market has hedged, the EA will pull aside. The EA is going to stop. Then it leaves you to manage this stuff, all right? Guys, since I started using this, I have not lost an account anymore. And I have a friend, they found out this for using it for about 15 years now. 15 years using this strategy, has never lost an account. This is the end of you blowing an account, provided you be disciplined and follow the instruction. So let's look at the settings of the EA here. So this is the Hedging Pro. So we have these. We always like to set this at FIBO. Now, I was talking about the distance before I take another trade. You understand? I told you from this red to this, I said about 50 pips. In this system, it is already set. So you don't need to go and sit down and start calculating. Is it 50 pips? Is it 100 pips? No. You don't need it. You've told the system that every time, if it goes 50 pips, take another trade. Now, look at this. Now, I'm going to put my take profit. What is my take profit? I want to quickly go in and get out of this market, depending on the amount of money you are trading. If you are trading like $500, then just put like $2.5 or $1.5 as your profit. If the price goes in your direction, you just make your profit and then you get out of it and look for another opportunity. Now, hide, take profit, you can leave it at false. Now, we have martingale. When people hear martingale, martingale is this. But then there are smart ways, because this one, we use what we call dollar cost average. All right. So here, we are going to say, we can't allow the market to go 99 steps, take trade. By the time you take those 99 trades, your account has blown. So we restrict it to just 4. We don't go more than 4 martingale level, and we use what we call dollar cost average. All right. So I put the risk at 4. I'm not going to let it go more than 4. Then here, now this is where the magic of this EA works. Guys, listen. If I enter the first one, it goes against me, and it is not up to 2.5% of my account. Maybe it's about $2 or $5. If the market goes against me 50 pips, that's $5 if I'm using 0.01. $5. I tell the market, take another trade again. Maybe if you take another one, if it comes down and the sum of the two becomes $2.5, just close. If it goes 50 pips and it, instead of coming down, it continues to go up again, take another one again, making 3. These 3 trades, 0.01, 0.01, then maybe the second one, the third one is 0.02. Because the third one is 0.02 at a higher lot size, if there's a pullback in little, boom, $2.5, it will close me. But let's assume it continues to go up. It happens, that's the real market thing. If it continues to go up, I've told this trade, see, take the 4th trade. The 4th trade maybe at 0.03 or 0.04 whatsoever. But at this point, I am no longer interested in making $2. No, I just want to get out of this market. This market is a wrong decision for me. I need to go out. Just give me emergency exit. And the system is going to say, what is your emergency exit? My own emergency exit. I will tell you that if the total sum of profit, that the 0.01, the 0.01, 0.01, 0.02, 0.03, if you sum up all of them and it's equal to 0.05, please close the 3 of them, close the 4 trades for me. That is like at break even. I will have put it at 0, but because I want to manage swap in case there has been a swap or something, and to take care of magic, I put it at 0.05. At this level, guys, have you seen an EA that protects like this? I know many of us, a lot of professional traders are listening to me, but you will understand that the kind of defense mechanism that has been put into this EA is powerful. Now, it went further to say, if you can't get me out, if you can't get me out at 2.5, at 0.05, please, once my drawdown, once I have a total drawdown of 2.5%, now you can choose to put everything here. But for people that are trading funded accounts, AXI, FTMO, funded next, we advise you to use 2.5%. Now, Once they draw down, I have $1,000 account. Once they draw, after taking all those trades, it did not even come down at all. Maybe it was because there's a big spike in the market. Donald Trump says something and market is just going up. And once it gets to 2.5%, that is $25 drawdown. If I have a $1,000, please hedge my trade. That is the instruction here. 2.5%. That is when this thing will happen, guys. That's when this happens. You see, the buy and the sell. The buy and the sell. Remember, I said, and you know what will happen then? It's going to add up all the buys, the 0.01, 0.01, 0.020. If they are total of 0.06 or 0.08, whatsoever it is, it will activate this total sum lot size in the opposite direction. So if you have total of 0.07 buy, you have total of 0.07 sell. Boom. Once that happens, the EA will pull out. It now tells you, Oga, come and manage this trade. And how to manage the trade is what I showed you earlier. When you are managing the trade, wait for it to get to the support zone and to get to the resistance zone or to get to the support zone. Guys, I hope you got this. You see, since the time I got this thing, my head have been. I wish I can teach everybody this strategy so that they can go use it. But I can tell you the truth. Using this thing and doing it manually can be taxing. It is better you allow the EA to manage that situation for you. So, guys, let me tell you this. If all you need to do, if all you can do in the next 2-3 months is to understand the principle of hedging, I wish you do it. Let me just close this so that I can wrap. I didn't want this thing to just be prolonged, but all right, guys, if you can, please, I want to beg of you, for those of you that are looking at what kind of skill set can you develop to increase your cash flow, I want to ask of you, please, go and understand this hedging principle. If you understand the hedging, the way I've explained it, and you know how to identify support and resistance, you can go and do this thing manually. But why do I want to do it manually? I would rather use the tool. And that's what the HedgingPro tool is for. Ladies and gentlemen, it's not because I want you to go buy a tool, but I have a commitment to everyone in my community that if I see that this is working, I want it to work for you. And that is why we are committed to training you on how to use this. Now, if you're using this and you use it on your $300 account and things, okay, let me show you this. See, guys, the price hunter that I was talking about, this is a price hunter. This is a price hunter here. You have it on your MT4 and on your MT5. The price hunter. Then you have the hedging calculator. The example I gave was just 0.020. What if it's 0.07 and so on? There's a calculator that can show you, okay, what to trim and how to trim it, the amount to trim, so that you can retain some profit. That is it. Then we have this EA. Look at this EA here. This is the HedgingPro. The HedgingPro EA, a very fantastic EA. Now, this particular EA, you have it in MT4 and MT5. You have it in MT4 and MT5. Now, this EA, this one takes the trade itself. And how does it take its trade? It's not just taking trades at random. It wants to get to the support or the resistance. Now, you can use it on a 1 minute chart. You can use it on a 15 minutes chart. You can use it on 1 hour chart. But we recommend that you use it on a 4 hours chart. When you use it on a 4 hours chart, it's more stable because 1 hour signal, because it's working with the price alter support and resistance also. All right. So this one here, it takes the trade, all the parameters. Once you set it and forget it. Set it and forget it. It will take the trade, close it, take the trade, close it, and where it hedges, it will hedge and leave it. That is where you need to come and intervene. Now, apart from this EA in this place, you still have, we now have some presets. Oh, but I don't know how all these, how do I set it at 50 pips and this? No, you don't have to bother yourself about that. There are already preset files. We have preset files. So just load the preset files. How are you going to do that? Don't worry, there's a video here and there's a manual here. We call it the Fat Robot Manual that will help you. And you'll be surprised. This thing, you can use it to trade indices if you have good money in your account. Don't use $500 and be trading indices. You'll be taking a lot of risk, guys. So here, then outside this, we now have the next EA that we have here. Look at this one, guys. This one, why is it feeling like this? Oh, okay. This is the Read Vision Academy site for those of you that are beginners. We have a lot of things coming up there, and I think you should go register on that site. I will tell you when it's properly functional so that you can. We're taking this as a serious business, guys. So when you go there, we have a lot of informations there. You sign in at the back end and everything. Don't worry, I'm going to do a training on that proper. So let's go to, I was talking about the Forex algo, the Forex algo tech. Man, this is a serious business, guys. Forex is an interesting thing, but you need to give it. Don't take it as a side hustle. Take it as a serious business. So when you take it as a serious business, it will give you serious income. I know what I'm talking about, guys. I really know what I'm talking about. So here, let's log in. This is a Forex algo. For those of you, I'm just trying to show us the tools that you have there. So you have a lot of things that you can work with in this stuff here. Okay, guys, I'm so excited about this. Please, you go take your time. This particular training, I want you to watch the video again. It's going to help you a great deal. What's this? Email Vision Academy, please, and then we log in here. Wow, I'm overshooting my time. But guys, please, if you have questions, can you just put it in the comment section so that once I'm just done here, I can just quickly take that quickly, please. I want to wrap this thing up. So for the second EA here is the one we call the HedgingPro EA. The HedgingPro EA is the EA in which you are the one that will take the trade yourself. When you take the trade, maybe you have signal group somewhere, you have some places where you pick trade somewhere and things. You can just take the trade and the EA is going to manage that trade for you completely. All right? And do you know what? For all this package, guys, including the various free trainings that you are going to be attending, the subscription for this EA is just $30 a month. $30 a month. And I have seen where I've seen some indicators. Big companies from the US, they are selling indicators. Guys, they will tell you this one, check this. You are the one that will do the checking and everything yourself. There's no guarantee that it's going to be a profit. There's no guarantee. You are the one that will do the analysis. After the whole analysis, the analysis will lead to paralysis. Guys, in this one, you have almost 3 EAs working for you with that super indicator that I'm talking about. Those ones are about $170, $200 monthly. This is $30 in a month. And they say it's about $200 annually. If you pay annually, $200. What a fantastic tools, guys. If you really want to go into business, and then you can use this tool for free for the first 30 days. How do you use it for free? If you open a funded account, the Forex funded, the AXI, that is another topic for another day. I think I'm going to talk more on AXI on Wednesday by the grace of God. I'm going to be talking about AXI on Wednesday. So on AXI, if you fund your account, with even as low as $200, you can have access to this tool for free for the first 30 days. Guys, this is an opportunity for us all. You want to increase your cash flow? This is a tool that can help you. With this tool, you can be guaranteed, provided you follow the instruction, you cannot lose your account. Ladies and gentlemen, I hope that you are able to get something from this wonderful session, and I pray that you're going to utilize it. Please go watch this video again. Understand, this is one of the videos in which I've kind of broken down, explained the hedging to you. I'm going to be dropping another video on hedging also, that's on this indicator also, that you can watch. And you just need to understand this. Once you understand it, you are good. I tell you, once you understand this, you don't need all this struggling, do one job here, do another job here. You just put it by the side, guys. Come, let's help ourselves. And you don't want to put your money in the hands of people that will just, boom, they blow your money is gone. Guys, no, don't let us do that again. Be a manager of your own finances. So, ladies and gentlemen, I want to say a big thank you. I hope, let me know if there are questions, and if there are no questions, I want to say a big thank you to everyone that has been on this call. Let me see. Okay, somebody said, how do we get this?
Waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up, we won't fall, breaking barriers through it all. Step by step our journey's clear, success is closer, don't you fear. Challenges we face headstrong, in this rhythm